Ladies and gentlemen, fear is here. Finally, a little bit of fear in markets. In this video, I will share with you all of your major events that are causing markets to plummet again. Nasty NASDAQ down almost another 5% today. Officially, will close in a bear market. Donald Trump tells investors that his policies will, quote, never change. He says that China has panicked since they retaliated with a 35% tariff on all U.S. goods. JP Morgan now says there is a 60% chance of a recession this year and much more. Ladies and gentlemen, buckle up, get ready, and let's get started. First and foremost, there's finally a little bit of fear in markets. TLT is up 2.2%. This is getting to a fear response. So if you were someone looking for an indication that the markets were getting ready to bottom, that could be one of them. And I think at this point, S&P's down 15%. You are getting more vulnerable to a potential bottom. Now, unfortunately, the dynamics at play here are just getting worse. So markets are finally showing a little bit of fear, and the dynamics in which are pushing us here are not getting better, they're getting worse. So JP Morgan raises recession odds for the year to 60%. JP Morgan warns Trump's new tariffs increase US and global recession risks. Economist Bruce Kasman now sees a 60% chance of a U.S. recession, up from 40%. A global downturn is also likely, but not certain. U.S. tariffs take effect this week, with uncertainty over negotiations and global responses. China has already announced a 35% retaliatory tariff. The U.S. economy showed signs of slowing in late 2024, though unemployment remains at 4.1%. Kasman is holding off on a revising forecast until the impact becomes clearer. Now, our second big catalyst of the day today, besides just the economic data, is a speech from Fed Jerome Powell. And let me give you the headliners of that. And let me just tell you, it's really just nauseously neutral, which the markets did not seem to like too much. Powell says we face risks for higher unemployment and higher inflation. That's a difficult for a central bank. Jerome Powell says policy stance is in a good stance to wait. Policy is modestly restrictive. Jerome Powell says a year from now, the uncertainty should be much lower as the impact of Trump policies becomes clearer. He's basically saying a year from now, we're either going to be in a recession, have inflation, not have inflation, have a strong economy, or be back to normal. We just really don't know, but over time, we'll get more clarity. Powell says that tariffs are higher than almost all forecasters expected, but we still don't know where it will come to rest, meaning even Powell thinks there could be some negotiations with tariffs. Jerome Powell says the Fed does not have a probability forecast of recession, but outside forecasts have raised that probability. Jerome Powell says that people expect the Fed to tell the truth, and that is what it will do. I don't think we've ever thought the Fed told the truth. Jerome Powell says the incoming data through this employment report still shows a solid economy, and that's what we talked about last night. The jobs report today was really going to dictate Powell's tone. A really bad jobs report would be a much different Jerome Powell today. The jobs report came in better than expected, in which we'll look at that here in just a moment, so Powell doesn't sound as concerned. Jerome Powell says that tariffs are highly likely to generate temporary rise in prices. Jerome Powell says that surveys show dimming expectations and higher uncertainty due to new federal policies, especially trade. Jerome Powell says the Fed is closely watching the tension between hard and soft data. Jerome Powell again reiterates multiple times, quote, the outlook is highly uncertain with elevated risks of higher unemployment and higher inflation. Jerome Powell says that tariffs are likely to raise inflation in coming quarters. More persistent effects are possible. And he says it's too soon to say what will be the appropriate path for monetary policy. And Jerome Powell says the Fed is well positioned to wait for greater clarity before considering policy adjustments. So again, it's really this stance from Powell of just being cautiously, nauseously neutral. Nothing really changed Powell's stance. Jerome Powell says it's the Fed's job to bring the economy back to stability regardless of what happens. And Jerome Powell says we don't see the Fed's two goals in tension yet. It's not the 1970s. Trump said on Truth Social that Powell is always late, telling Powell that this would be a perfect time for Powell to cut interest rates. Some of the positive news today as well also came from the crisis starter himself, Donald Trump. Donald Trump says Vietnam's lamb, I don't really know, is it lamb? I don't know, told me that Vietnam wants to cut their tariffs down to zero if they are able to make an agreement with the US. That's what did cause your retailers and clothing companies, that sector, to start doing a little bit better today, like Nike and Burlington and Macy's, because a lot of your clothes are made in Vietnam. And although, I mean, you're seeing a little bit of what sounds like negotiation from Vietnam, it sounds like the complete opposite is coming from China today. And we'll talk about that in just a moment. And the last comment we have from Powell is, quote, Powell says, feels like the Fed does not need to be in a hurry. Quote, we have time. I guess those are famous last words. Check out this crazy headline. Hedge funds on Thursday sold global equities on a net basis at the largest one-day amount since 2010, according to Goldman Sachs' note to clients. Wedbush analyst Dan Ives today says tariff economic Armageddon crushing tech. He says iPhones may rise from $1,000 to $3,500, slowing AI progress. U.S. consumers will face higher tech prices. Tariffs may cut tech earnings 15%, disrupt supply chains, and cause recession or stagflation. Tech stocks face the worst crisis in 25 years due to Trump's tariffs in the last 36 hours. Reciprocal tariffs aim to match U.S. trade surplus, supported by auto, industrial, and tech leaders. Unlike 1980s, tariffs now hit tech trade, AI revolution, and global industry hard. Silicon Valley relies on Asian supply chains for chips, hardware, components since the 90s. 40 years of global trade gave U.S. cheap tech. Now 50% China, 32% Taiwan tariffs raise cost 40 to 50%. U.S. manufacturing takes 4 to 5 years to build, but labor costs are high and workforce is unprepared. Retail investors, although, bought $4.7 billion in stocks on Thursday, the largest level ever over the past decade. Now, traders are also adding to Fed bets this year, seeing a 50% chance of 5 cuts this year. Officially, China announces an extra 34% tariff on all U.S. goods imposed from April 10th. That adds 11 U.S. companies to the unreliable list. UBS Global Wealth Management expects 2025 U.S. GDP growth to be less than 1%. This outcome could include an intra-year recession with GDP contracting 1% peak to trough. Now, we actually did have some better than expected data this morning, but as I said before, if we had good data, it was kind of a non-event, okay? You had 228,000 non-farm payrolls for March. Now, last month's number was revised lower from 151,000 to 117,000. So some people are going to say, like, how strong is it? Because you're seeing 30, 40% downward revisions still from the previous month. But that was much better than the consensus that was around 135,000. Although the unemployment rate did indeed move up from 4.1% to 4.2%. Average hourly earnings month over month went up from 0.2% last month to 0.3%. Average hourly earnings year over year actually came in lower than expected at 3.8%. Participation rate at 62.5%, better than expected. And then everything else kind of stayed the same. What's interesting, though, is government payrolls. We were expecting to lose jobs in the government sector, but yet you actually added 19,000. So throughout Doge and all of these firings and all this, you have not actually lost any government jobs so far in a month. So some people are saying, well, that's going to show up next month. And that's kind of the argument that we've gotten for the last 2 payroll reports now is the weakness is going to come. It's going to come. It's going to come. But so far, you're not really seeing that. Besides the unemployment rate, if we start to get some weak payroll numbers, unemployment rate is going to skyrocket. and we're going to be up shit's creek quickly. And you can see here, NASDAQ 100 sinks 20% from record high, set to enter a bear market. Over on Kalshi, the odds of a recession are up 15.1% today, spiking to 60%. It says the probability of a US recession in 2025 has surged to 60%. On Kalshi, its highest level in months. The sharp rise comes as China retaliates with a 34% tariff on U.S. goods, escalating trade tensions after the latest U.S. tariff hikes. Donald Trump on Truth Social says China played it wrong. They panicked. The one thing they cannot afford to do. And Labor Secretary Chavez Deramer says this won't be the last positive jobs report. Trump says great jobs numbers, far better than expected. It's already working. Hank tough, we can't lose. I think he meant hang tough, we can't lose. Donald Trump says this is a great time to get rich, richer than ever before. And this statement right here, really, I don't think investors like this. Trump said this to investors: my policies will never change. So for a lot of people that have thought this is kind of a negotiations tactic, Trump's telling you like, hey dude, this is what it is. Deal with it. Now, Tesla stock at the time of recording this video is down about 10%. Now, things could change into the end of the day, but assuming this continues because of the level of fear we have out there, it's starting to get ugly. You're back below 250, which puts you in this range to potentially go back as low as that 215 level. Now, if recession fears do continue to rise and bonds continue to get a bid, then you will continue to see selling, and that's going to put more downside pressure on Tesla. So keep that in mind. The CNN Fear and Greed Index is at 4 today. Honestly, I've never seen anything like that. So if there was a moment to go through a little bit of a bounce, it's probably now. And I expect that we will probably get some kind of bounce here pretty soon. But is it the end of this correction? Probably not, because we're almost at this point, in my opinion, guaranteed to be going into a recession. Now, everyone's got to try to figure out what that recession could look like. Is it shallow? Is it deep? How is it going to affect earnings season? And unfortunately, with these tariffs, it could affect earnings a lot more than maybe even a normal recession would. And that's what people are trying to figure out. Now, in the news today for Tesla, Tesla has revealed that they opened 2,200 new supercharger stalls in Q1 2025 and delivered 1.4 terawatt hours of energy across 42 million supercharger network charging stations. Tesla has released a new version of its safety score. Excessive speeding is now measured as a proportion of driving time in excess of 85 miles per hour or speeding in relation to vehicles in front of you. And effective today, in response to the latest round of tariffs, the government of Yukon, Canada is ending all rebates only for all Tesla products offered through the Good Energy program, as well as cancel some government Starlink accounts. No other automakers impacted by this announcement. A new $175 million Tesla Megapack battery is about to be turned on and join the grid in Queensland, Australia. The 300 megawatt, 600 megawatt hour battery consists of 164 Tesla Megapacks, is now entering the grid management system. Tesla has also launched a new FSD supervised early access program. An early access button appears on the bottom of the Tesla app showing your enrollment status and the option to leave the program. So honestly, I'm not exactly sure what this is about, but I would say it's got to be positive, right? Option activity for Tesla today, you guessed it, is a little bit more negative than positive. You have 171 different trades totaling about $71 million with a positive order value of 41%. Not as bad, though, as you would expect, given the stock is now down somewhere around 11%. Now, short sellers, they're not doing a whole lot today. It looks like about 8,000 shares are being sold short. But again, that's pretty much nothing given how much pain you're actually seeing out there. The percent of stocks trading above their 50-day moving average sitting at 13.3%, some of the lowest numbers now we have seen since 2022. This is definitely a weak market. 10-year Treasury yields today are down 16 basis points to 3.895%. They are now plummeting. This is showing you a degree of fear now that you did not see yesterday. So whether this is the start of, even lower yields and more, pain in markets, we'll see. But, finally getting some fear could be a sign of a bottoming process. Now, at the time of recording this video, the Dow Jones Industrial Average is down 4%, down 1,600 points today. The S&P is down 4.8%. The nasty NASDAQ down 5.3%. Russell 2000 absolutely obliterated, down 5.6%. The VIX is up 45%. You finally gotten that large spike of fear. You're now more fearful than you were on August 5th. With the VIX at 43.45, which actually opens the door for emergency Fed rate cuts that could come at any time, because you are now open to essentially breaking something in the real economy based on what's going on in the stock market. This is a temper tantrum Wall Street is throwing for, obviously good reason. So let me know your thoughts on all of this down below in the comment section. We will have a lot more to discuss in this regard in the next video. Stay tuned to the channel for that one. Ladies and gentlemen, hit the like button, subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.